In today's video, I will explain the entire strategy that actually changed my life. And before we go into it, I was actually same as you watching this. So I was at my rock bottom, I was going in school, I was working a job just to make a little bit of money to blow it up on trading. And then I just realized that I just need to refine my model, and that's what got me from unprofitable to profitable. And this process took me about 3 years, so if you want to do it quicker, just watch this video. Take notes because I'm gonna explain everything from A to Z. So let's just get started. So you can see in the last few months I made about $90,000. So you can see all of my profits right here. Even this month of December, where I just took few trades, you can see I made almost $20,000. And also, if you want to see how I actually live trade in the live markets, you can go after this video to this channel and you can basically see all of my live executions in the actual market. Me losing money, me making money, everything. So in this video, I'm actually going to teach you about SRS. So basically what it is, it's structure, rebalance and sweep. Because within all my years I realized that market actually comes down to three simple things, and it's these three right here. So I'm gonna explain you in details how to find these three simple things on the actual chart, and why do they make so much logic for me, and how are they gonna make so much logic for you. So let's start with the first step, which is going to be step number one of course, and it's gonna be identify the market direction, and it's going to be the structure phase. And what we are going to do in this step, it's as I told you up there, we are going to actually identify where the market is headed. So we are going to see in the market these kind of pushes where just the market makers, the institutions and the banks are actually pushing the market and just clearly showing us where they want to push the market. So it's going to be pretty obvious once we come to the charts. We're going to see huge candles like this, and then it's just going to be followed up by some more huge candles. And after the structure phase, we can go on to the step number two, which is going to be the rebalance phase. And what it actually is, it's just going to be in between these basically structure phases. We are just going to see some kind of rebalances in the market. So it's going to be some kind of little consolidation and a little pullback before we actually continue. And it's just going to be crucial for us because markets cannot just always just pump like this forever, because they always need to do some kind of corrections and rebalances. And now I think one of the most important, because if there was not this step in this strategy, the strategy completely wouldn't work. So let me explain you in details what it is. So we need to wait for the market to sweep the liquidity. Now, what is liquidity? Why do we need it so much? And let me explain you in details. So when the market is, let's say, trending to the upside like this, so we are making some kind of corrections, pushes, corrections, pushes. This is just how everybody, I think even you, imagine the market moving with some kind of pushes and then corrections and then pushes. So this is how a lot of people in the market think it's functioning. And what do all the people do? When they see after a big push like this to the upside, they want to see some kind of correction, and then what they want to do is they want to enter from some kind of their zone to the upside. So they want to target to the upside from some kind of zone they mark on the chart. And when they enter the actual trade, market is going to give them some kind of, I like to say, hope. So market is going to leave some kind of structure right here, so some kind of little low. And what market is going to do, I think 90-95% of the times, is just going to do this. It's going to sweep it once again. So actually what it's going to do is, after it gives them like kind of hope, I like to say it, and kind of confirmation for their entry. So a lot of people, when they see market starting to push again, they're going to enter. What a market is going to do is going to manipulate all of them to sweep this liquidity once again. And this is liquidity, because liquidity is other people's stop losses. It's just orders in the market, and what orders are is just other people's stop losses. So when they manipulate all of their stop losses like this, what are they then going to do? They're just going to continue with the upside movement. And why is that? Because they just collected everybody's money on this low, and they can just continue because now they got fuel, which is money, to continue pushing to the upside. And a lot of the times this is just going to happen, and then after that we're just going to continue to the upside. So that is the sweep phase. But we are going to have some of the key rules that are just not going to be able to make us be a part of this liquidation phase, which I'm going to show you on the actual chart. But before we actually go to the chart, let me show you what the entry is going to be. So after the liquidation, after the sweep phase, basically where liquidity sweep happens, we are going to wait for this specific pattern. We are going to wait while we are going to the downside on a lower time frame, we are going to wait for market to create and to leave behind some of these fair value gaps while going towards the sweep. And what are we gonna wait? We are actually gonna wait for market to, after we sweep the liquidity right here, after we sweep it, we are going to wait for the market to reverse and to actually manage to inverse or close above the actual fair value gap. So if we leave a fair value gap while going to the downside like this, and then after that we start going to the upside, and we do not just reject from the fair value gap to the downside, because fair value gaps, which are imbalances, are always going to basically try to push the market to which side they were created. So this fair value gap right here was created while the market was going to the downside. So if we come to it, we want to push the market to the downside from it. But since our entry model is going to be very smart and it's not going to let us get manipulated, if the market wants to do, I like to say, one more manipulation like this, it will just reject from this fair value gap right here and do it. But we are going to wait for the entry above this fair value gap. And what is that going to let us do? That is just going to let us enter the market right here on the actual closure of the body. So body needs to close above, and you can see right here, basically we are going to enter on a closure above the fair value gap. We are going to put a stop loss below the candle low that actually inversed or closed above the fair value gap, and we are just going to target some kind of liquidity to the upside, and it's going to be so simple. And basically that's it. Like, that's structure, rebalance and sweep. And now we can actually go to the live chart and put it all together. But before we do that, if you guys like the video till now, just make sure to leave a subscribe and like. That just means a lot to me, because I know I'm doing something right. So let's go into the chart example. Okay, so here we are at the live example, and I'm pretty sure that if you just look at a chart, you can already see two phases that I just named in the beginning. So let's actually start with the phase number one, and that is going to be the structure phase, as we call it. So this right here is going to be our structure phase, and we can mark it like this with the red, like we actually did at the beginning. So this is going to be just our indication that the market actually wants to go to the downside, because the market is actually making the push to the downside. The second phase is going to be right here, because you can even see it with your clear eye. We can just mark it with a yellow box, and that's basically a correction phase. So if we look at a market clearly went to the downside, and now for some reason market stopped and it's making some kind of retracement. So what do all people do when they, let's say, see, I would say, this push right here? They enter the shorts like this, and then if somebody didn't enter right here to the short towards the downside, what they do is they enter shorts, let's say again right here, and they put their stop losses above the previous high, which is just very logic, and they target something to the downside. So this is what I was telling you about how liquidity is functioning, because everybody is expecting a continuation of this move. And what is going to happen if we fast forward the market? So we are on the 15-minute time frame also. We are always going to do this either on the 15-minute time frame or on the hourly time frame. And let's see what is market going to do. And there it is. So this is the liquidation and the manipulation I was talking to you about. So market is always going to do this, and it's just going to sweep all of the people who entered too early in the market. So what do? We are on the 50-minute time frame right now. What we need to do is we need to go to the 1-minute time frame. So I told you guys entry is going to be on the lower time frame, but is it actually going to be on the 1 minute? That actually depends. So entry can be on the 1-minute time frame, 2-minute, 3 and 5-minute time frame. So it all depends. So when you go, you always start with the first minute, with the 1-minute time frame. You see if there is a fair value gap. So we can see market left a fair value gap right here. I'm going to mark it like this. So market left a fair value gap. Now the second thing we need to do is we just need to check 2, 3 and 5-minute time frame to see if they also have a fair value gap. So we can see 2-minute has a fair value gap right here. So for right now, this is the time frame we are entering on. Let's go to the higher time frame. So 3-minute also has a fair value gap. So right now this is the time frame, and we just need to check 5, and the 5-minute does actually have a fair value gap too. So we always enter from the highest time frame that has the fair value gap. And let's right now wait for the part that I told you about, where we need to see market close below this fair value gap. So looks like market made a little pullback, and now looks like it is going to give us the entry. So let's see if that actually happens. So market actually, yep, it gave us the entry. So what we just needed to see is a close below this fair value gap or a imbalance. We place our stop loss either above the body or above the candle. Since above the candle will be just absolutely way too huge right here, we can put it above the body like this. I don't like to do it tight like this, so I always like to give it some space. And what can we target? If we go back to the 50-minute time frame, we can look for some potential liquidity. So we have this nice low right here. So if we go back to the 50-minute time frame, let's see if we do have some kind of nice low that we can target. So we can actually target this low right here. We can also target this low, but it's completely on you whether you want to target bigger or smaller. Okay, so right now let's just spread our TP. So right here it will be 1.9, so 2 risk to reward, and down here it will be almost 5 risk to reward. So let's actually see what take profit is going to get hit. And actually every single of them is going to get hit. So basically I always like to add this detail. If you are risking 1% with $100,000 account, you would make almost $5,000 on this trade. So that is absolutely insane. But let's just go to the second example. Okay, so here is the second example, and you can clearly see that market was pushing to the upside, made a retrace, and then a new push to the upside, a little correction, and then a new push to the upside. So basically what do we want to see in the actual market is of course just some kind of sweep. And also one more complaint that I forgot to tell you about, guys, is we want to spot imbalances right here, because a lot of the times you're going to see market retest an imbalance, bounce from it. So a lot of people are going to just enter the market straight off from here to the upside, put their stop loss below the low, and basically what you're going to see, for example, let's see if this one does it. We are just going to see a sweep of this low that we just newly made. So let's see. Looks like market is kind of rejecting, starting to go to the upside, and there it is. So we just swept all of it. So right now we basically have a sweep of the liquidity, which was this liquidity right here, and we can also see that this right here fair value gap or a imbalance is rejecting towards the upside. So if we go to the 1 minute, basically where we actually swept liquidity, I want to start with that rule that we told about the entry. We start with the 1 time frame, we mark out the fair value gap. So we have this fair value gap, we have this fair value gap right here. I'm gonna remove this one so it's way easier for us to spot. So on the 1 minute we have 2 fair value gaps. On the 2 minute time frame we have huge fair value gap right here. On the 3 minute time frame we also have a fair value gap, and let's see if we do have the 5 minutes. So I'm on the 5 minute and we do not have a fair value gap right here. So what do? We go back to the 3 minute time frame and we wait for the 3 minute to actually close. So let's see if that is gonna happen. So yep, so market closed right here and we enter the trade, and since the same candle did not inverse the whole fair value gap, I'm gonna put my stop loss at the bottom of the fair value gap. If this candle was to inverse from the bottom to the up, I would put it under the body or the wick like this, but since it didn't, I'm gonna put it right here. And what do? We target some kind of liquidity to the left, just to the outside, maybe this one or some kind of other one on the bigger time frame, and let's see how the trade is actually going to play out to the upside. So we are making steady progress, and there it is, we just skyrocketed to the upside, and let's see if it's actually gonna go even higher than this. So if I fast forward the market, you can see the market actually pumped up a lot in the end. So if you were to even target higher risk rewards, it would work perfectly. So I hope you guys actually realize how good this strategy is, and before you actually leave the video, I want to give you something for completely free. So the free thing I'm gonna give you is a complete PDF which has 10 pages about the whole strategy. So if you want to claim that PDF, just go down there to the description and just claim it for completely free. Also, if you guys like the video, just leave a like and also subscribe to the channel. That just makes me know that I'm doing something good and that you guys actually like it. And one last thing, if you guys actually want to speed up the whole journey and get to work one-on-one with me, there might actually be some spots left. So if you go down there to the actual description and book a call, you're just going to see if you are a right fit through that call, and maybe you get accepted into the mentorship. So with all of that being said, I'm gonna see you in the next video. Peace.